Still flat for the market, except for some weakness that's catching up in the mid-cap space. But it's not a great deal. It's just about 0.2 down. Advanced declines are absolutely 1:1. Rupee is exactly where it was when we left it on Thursday evening. And bond yields are maybe 1 basis point here or there. Flat terrain. So let's concentrate on another sector which has been in the limelight, sometimes for the wrong reasons, for the last 5 months, the NBFC space. More recently, of course, a couple of days back, representatives of the NBFC companies even met the newly appointed Reserve Bank governor to discuss what they would like in terms of policies and the issues plaguing the sector. Let's invite an important member of the NBFC space, Umesh Revabkar, Managing Director, Shriram Transport Finance. Good morning, Mr. Revabkar. Thank you very much for joining us. What is the NBFC wish list?
NBFC's wish lists are quite long. I can't
present it to the RBI governor.
But the only thing is the major. Yes, but major wish lists are alternative liquidity mechanism for the growth, because a temporary liquidity is something, but what is the alternative for a long-term growth? If NBFC have to grow, it needs alternative liquidity options, which we discussed, and the governor was patient enough to listen to each and every one, because there was a representative from MFI, then large corporate lenders, and asset financing lenders like us. So he listened to everything. And I think the RBI is quite positive, and they assured us a quick resolution or quick understanding of the issues and trying to help us out.
Now, can you elaborate this a little more? Are you all asking for a line of credit from the Reserve Bank in some fashion now, for the moment? Or are you all asking for rights to collect deposits? And what was the RBI positive about? Are they positive about giving you all a line of credit now, or anything else?
A line of credit is something which was not discussed at length, but because RBI felt that there is enough liquidity in the system, so there is no hurry to create a separate window for NBFC. And that, since it was said at the beginning, we did not really deliberate on that. But yes, deposit-taking window, or increasing the existing deposit-taking options, and also privately placed NCD. These are some issues, because there is a lot of public savings which can be attracted towards the large NBFCs or good-run NBFCs, which we and which RBI also felt that should be the way to go forward.
Okay. Mr. Revabkar, good morning. How is the liquidity situation currently? I mean, the last time we spoke, you said that especially in spaces like commercial vehicles, the liquidity situation is still quite tight. Has there been any easing of liquidity since then?
See, for us, liquidity is not a challenge. We have enough resources. But only thing is, the cost of funds have gone up by around 60 basis point incrementally over the what it was some time back. So that additional cost is transferred to the customers. When we pass it on to the customer, what happens is his EMI goes up. So to prevent that EMI going up, we reduce the quantum of loan. The LTV coverage comes down, margin requirement goes up. When the margin requirement goes up, the amount going to lend to the customer comes down, and customer need to bring in little more money. So ultimately, a resultant is little lesser loan than what it was happening in the past. So that's the only difference. So to that extent, there will be some tightness for the demand. There is enough demand from the customer, but that is going to be there till the cost of fund remains high. So if the cost of fund comes down over the period, then probably the LTV relaxation could be there, and there could be a little more disbursement.
Okay. Okay. Mr. Revabkar, now if we can discuss the state of the market. You know, the commercial vehicle numbers from, say, Ashok Leyland or others in December were a bit of a shocker. Is this temporary? Is this because of the disturbance in the debt market? Are things better in Jan?
Yes. See, we have to look at the commercial vehicle movement. The bulk transportation is steel, cement, coal, etc. When the real estate market or infrastructure market goes slow, automatically demand for cement and steel comes down, and the utilization levels of vehicle come down. So the the bigger vehicle, heavy vehicle sales came down because people felt there is not much of movement on the vehicle. So people buy a vehicle which they have to repay the loan over the 5 years, depending upon the current demand. See, after buying the vehicle, after 1 year, again there could be some kind of a less utilization. That people don't see. If there is a current less utilization, they feel that it is better to postpone till we get better days. So there is a postponement in December. And I feel now, because January, if you look at, in many parts of the country, in the Punjab, there is a Lohri celebration, Sankranti, Pongal, lot of celebrations because new harvest coming into the market. And with that, I believe things will become much better. I definitely have a much better pipeline for a new vehicle. So that means the demand is reviving. I feel towards the post 15th of January, the demand should become much better. And throughout the up to March, the demand will be on par with what it was in July-September period.
Okay, just one follow-up question. You said because of the increase in cost of funds, you know, and the pressure to pass it on to your customers, you are looking at lesser amount of loans disbursed over the next few quarters. What is your disbursement target, say, by the end of FY19 and maybe in the initial part of FY20 as well?
No, it is dependent. See, if the market, if customers feel there is a buoyancy in the market, they will even otherwise they borrow money. So that it doesn't reduce their enthusiasm to take a credit and run the business. But in the last quarter, what happened is there was a less enthusiasm because market also was not looking bright. So the people also wanted to take a less credit. So in the next quarter, especially this quarter, I believe if the momentum is there, if the real estate infra activity booms, then automatically customer will borrow more or buy more assets, depending upon the buoyancy in the market. There, the cost of fund doesn't matter much. Customers will be able to put more margin and take more loans. So I feel the overall credit growth for us will not substantially come down. We had given a guidance of 18 to 20% AUM growth. First 2 quarters we have grown at around 21-22%, and we should be able to grow over for the year at 18% at least.
Okay. Well, we have more questions, sir. Unfortunately, out of time. We will touch base with you sooner rather than later. Thank you very much, Mr. Revabkar, for joining us. In the course of the last 15 minutes, the markets have given up a little more. It's mildly in the red for the bigger indices and a little deeper in the red for the mid caps, but that's just 0.25%. So I'm sure there are a lot of ideas, both long and short, coming up for you on Chartbusters. Thank you for watching Bazaar.